What revenue streams do states without sales tax use? Imagine a state that chooses not to collect sales tax from shoppers. How does it keep its government running and services funded? The answer lies in a mix of other revenue sources that are just as effective. States like Alaska, Delaware, Montana, New Hampshire, and Oregon do not have a statewide sales tax. Instead, they rely on natural resources, income taxes, property taxes, business taxes, and federal funds to fill their coffers. Alaska, for example, earns a big chunk of its money from oil. It taxes oil companies and gets royalties from oil extracted on state land. It also pays residents dividends from the Alaska Permanent Fund, which is funded by oil revenues. This way, Alaska can avoid a sales tax and still provide public services. Montana benefits from its natural resources and tourism. It uses excise taxes and fees related to these industries to bring in revenue. These are taxes on specific goods or activities, like hotel stays or outdoor gear, which help support the state's budget. Oregon and New Hampshire depend heavily on personal income taxes. Oregon uses income tax as a main source of revenue, funding schools, roads, and health services. New Hampshire, on the other hand, taxes dividends and interest income, which are earnings from investments. It does not have a broad-based income tax but still raises money through these targeted taxes. Property taxes are another key source for some of these states. New Hampshire relies on high property taxes to make up for the lack of sales tax. Property taxes are based on the value of homes and land, providing a steady income stream for local and state governments. Delaware's economy is centered around corporations. The state charges corporate income taxes, franchise taxes, and fees on companies incorporated there. This business-focused approach generates a lot of revenue without needing a sales tax. States like New Hampshire also impose excise taxes on goods such as alcohol and tobacco. These taxes are specific and targeted, helping to raise funds while keeping the overall tax burden lower for residents. Federal funding plays a big role too. Many states without sales tax receive significant money from the federal government, which helps support schools, transportation, and health programs. They also collect fees, charges for services, investment income, and royalties, all adding to their revenue. Some of these states allow local governments to add their own sales taxes or local option taxes. This provides additional revenue at the local level, giving communities more control over their budgets. So, in summary, states without sales tax use a mix of revenue sources like income taxes, natural resource earnings, property taxes, business taxes, excise taxes, and federal funds. They choose these options based on their economic strengths and policy goals, making sure they can fund public services without relying on sales taxes.